do I mean by an underlying asset. It's not always something that is mentioned on the contract is an underlying asset. It has to meet with some conditions to be called an underlying asset. Now, this concept is important for us from our exam perspective. Sometimes we have to justify why IFRS 16 leases is applicable. At that time, we may have to say why it is an underlying asset. So this explanation given here would help you there. So what is an underlying asset? For an underlying asset, two conditions are required. First, the supplier should not have substitution rights. Second, the asset should be physically distinct. So now if I simply tell you that there is a lease of an asset, that asset is mentioned in the contract. And I'm saying this asset is the office. So naturally, if it's mentioned on the contract, the address will also be there on the contract. And you will all agree with me that it is physically distinct, independent. I don't think there is any doubt about it. So this looks to be straightforward. But sometimes things are not as straightforward. Suppose there's a lease of a bus. There's this entity Delta, which is dropping and picking up their staff, and they need a bus, okay, a Volvo bus, which is flying from the office to the residence and residence to the office every morning and evening. Now, this is the subject of the lease. So, suppose now the contract is mentioning that Delta is leasing this bus from a lease company, from a bus company. Okay, let's call him from a bus company. Delta has leased a bus from bus company. Okay, now this bus company has mentioned that the bus will be parked in Delta's premises. Every day, the driver would come, take the vehicle, drop the staff, come back in the evening, park the bus in Delta's premises and go back. Also, it says that if there is a breakdown, then an alternative bus would be provided. So first of all, in the contract, they mentioned the bus number. So when they mention the bus number, we can very clearly say that it is physically distinct. Okay. Now that condition alone is not enough. We have to look at another condition. The supplier should not have a substantive substitution right. If I tell you that the bus is parked in Delta's premises and only if there is a breakdown, an alternative is provided, or if a maintenance work is required, an alternative is provided, can we say that the supplier has any kind of substitution rights? Does he get any economic rights by substituting the bus? Can we say that the bus company has any substitution rights? It does not have any substitution rights because the same bus is given at all points of time. But on the other hand, if the contract said the bus is parked in bus company premises, every morning bus company will decide which bus to provide to this vendor. So suppose there's another bus requirement of a bus comes. Suppose there's a contract or with a person who's going on a picnic and he wants a wonderful bus. So if you're going to get more rent by giving this bus which you normally give to Delta on that particular day and give Delta a lower grade bus, automatically it means that bus company is having substantive substitution rights. So then you cannot call that bus an identified asset. Okay. So if you're going to say something is an identified asset, first it should be physically distinct. Second, there should be no economic benefit from substitution of that bus. Sometimes you have items like a central AC. If a central AC is on rent, then naturally it cannot be substituted. So those become physically distinct and cannot be substituted. But sometimes you have certain assets which are capacity based. Suppose there is a gas pipeline from which gas is coming into the factory of Delta. So this is a contract between the gas company and this Delta. Now, if the contract says that 95% of this pipeline gas will go straight into Delta's premises, then the standard says you can consider that to be physically distinct. So, but if the contract says that he can get 15%, 20% of the gas, then that is a capacity based contract or an asset which is capacity based, and you're not getting more than 90% of that outflow from that plant. So it cannot be considered to be a identified asset. Okay. So the point to remember is when you're writing your answers, you have to identify whether it's an underlying asset, and you need to say why. First, talk of physically distinct and talk of substitution rights to justify whether that is a identified asset. Okay, underlying asset. Next is, I told you, it is not enough. Yes, tell me.
I'm sorry, the last point on the capacity base, it's not clear. If you can share that example.
Okay. Okay. So suppose there's a gas pipeline from which Delta gets only 10%. 10% of that gas is earmarked for Delta. Whatever comes every day, only 10% will be given to Delta. Then this is a capacity-based outlet, capacity-based, asset that is given to him. But he is not getting more than 90% of the outflow from that plant. So the standard says it is not physically distinct. He should get at least 90% of the outflow from the plant. Then the standard says it is considered to be physically distinct. But if he's getting 10%, 20%, 30%, you cannot consider that kind of asset to be a lease asset where it's an underlying asset.
Okay, so if it is 10% only, which means it does not have substantive control over that asset. So that is the reason. 90% means it will be substantive. Okay, got it. Yeah. Thank you.
So to be called something as physically distinct and it's capacity based, you should get at least 90% of that capacity. 90% of the output of that plant should come to your premises. Then you can say it's an underlying asset. Because asset like a bus can be easily identified, but something like a pipeline, gas coming through a pipeline is really difficult. So the standard has clarified this. Okay.
Right. Thank you, ma'am.